Looks like we have a slight delay there.
Odd.
That is odd. Well, we're already live on YouTube, so we're getting started.
Hey, there we go.
I'm surprised this thing doesn't want to play for us. Oh well. Well, guys, we might be having some technical difficulties here on YouTube. It looks like it is going slow here on this end.
It absolutely does. We will see. I'm going to bring up mine. And if you're out there, good morning, halftime crew, or No Justice Squad, as we like to call you. So yeah, just yeah. It's there we go. We do it like, hey, it's me. It's folks on the recap know that I am the bringer of bad news when it comes to technology. So I'll take the blame for the no sound here this morning.
You know what? I'm actually going to. All right, we should be back up now. And it should be working, guys. Welcome out. Sorry about the technical difficulty. I was going to try to have the our intro with the warning in there, but I guess the video player didn't want to work, didn't want to function with us. But thank you guys for coming out again for another episode of No Justice with Maki and Martin. Frank, how are you doing this morning?
I'm doing great, bringing the technical difficulties with me, and you're welcome for that. Now you know how I feel at least once a month over on the recap. So good morning, crew. Hope everybody's having a great Tuesday.
I remember some guy in the chat, I mean, I thought his name was Frank, saying that there was never technical difficulties over on the market recap.
There aren't. I don't know what you're talking about at all. So I have a short memory. I'm like the DB of technical people. I forget real quick that I just got burned. Move right on to the next. So,
well, a couple of different things going on in the market this morning. I mean, Apple had their conference. That's the main headline people are talking about, is how Apple released their new streaming service, as well as a credit card and a gaming service. So a little bit more than I think was anticipated.
I think so.
So we'll get into that a little bit later. But other things in the news, consumer conference is out, didn't quite do as well as it should. But as usual, let's just start at the top of the markets and go from there.
Right on. And welcome everybody. Good to see you. Second round. We're here again. I guess it's our third round, Cody. Just feels like the second round. So.
Oh, it is the third round. Yeah, because we were here Friday.
We were having too much fun on Friday. It just didn't count.
All right. Yeah, that's true. Too much fun. Are we still skipping over there on YouTube?
I'm looking all right on my end. I've got the chat up. It seems like we're going good, but
well, if it looks good on your screen, then I'm going to keep going. It looks like it might just be on my end. I'm going to start shutting some things down. Are you seeing my screen here?
Yes, sir.
Awesome. Let's get right into it. So the markets, the headlines are saying, markets up off of tech news. But when I, first looked into the tech sector, because when I see that headline, I'm like, all right, market's up. I looked at it. It was up about 1% this morning when I first looked at it. So then the next thing I went ahead and did is I jumped over and said, okay, headlines are saying market's up on tech news. Let me jump over to the tech sector. And the tech sector is not doing nearly as well as they made it sound like it was doing.
Yeah. Well, they got your click though, didn't they?
They did.
And so maybe that's why that was out there. A lot more fun to click on tech big in the news than maybe something else. No, I mean, basically following suit with the broader market, gapping up on the open. And, in all fairness to the newsmakers out there, really early in the trading day on that gap, we did start to run, broadly speaking, certainly was over in the tech sector as well. We've not been able to hold that. We've given some of these profits back so far in the trading day. So maybe they were just getting excited. But we were looking a little stronger earlier today than we are currently, I think.
Yeah, so let's go ahead and look in intraday and see what that does. It looks like I might be the slow computer this morning, Frank. I might have to pass it off to you. Interesting.
There you go.
Shooting from home this time. Wanted to see how that felt rather than having to get up and drive really early. But yeah, intraday on the S&P. So this is the hourly chart. It had that pop up, and then it, 2 hours that have just been selling off. What are your thoughts here intraday?
I always call this cheating. You know, when we try to gap through resistance or areas that are concerning, and we all know what an impactful area that 28 to 2820 zone has been. So I always kind of think it's a little cheating. We try to gap, you know, jump over it while we're sleeping, if you will. So I think very naturally, folks were a little skeptical. You know, for me, this isn't, you know, the way I wanted the day to start. I needed one more day. I, of course, believe that we are getting a pullback opportunity, but I didn't want to see it take off. And it looks like maybe I wasn't the only one out there that needed that little extra time for this to develop. So for me, I think this is kind of in a certain way to be expected. We tried to cheat maybe the sentiment, maybe we're just not quite there yet, sold on this pullback. At least that's my read on it personally.
Yeah, I can definitely see that. I mean, market opened, wanted to jump up, wasn't sure, came right back down. I think it's a mixture of various different things, because the consumer confidence did come out right about this time, and it basically said that, you know, consumers out there, they are not feeling as confident with the economy as anticipated. Now, that could be a number of different factors, and it's going to be another big headline that's going to be talked about in the news. Some of the biggest factors we're talking about is government shutdown. So if the government shut down, and, you know, there were people who were laid off, as well as people being told that, you know, the government is shut down, people start to lose confidence off of that. So that could be one of the key factors. A couple other things could be the fact that the markets were down during this time of when this consumer confidence is looking back, because most of these reports are all looking back to previous quarters, right? So this is basically saying that during that time, how do consumers feel? And during that time, government was shut down, the market was down. How should consumers feel? Like, to me, this doesn't surprise me that consumer confidence wasn't as high as anticipated.
Yeah, I mean, that's a really good take on it. I don't really have anything all that intelligent to add. Finally, fine job there, my friend. Yeah, I mean, and I really think that kind of hits it right on the head.
Perfect. Well, let's move on to the Dow, which, I mean, all the indices are up right now. Now, to me, I'm not seeing much divergence between each of the sectors to say, you know, hey, this one's doing this much better than the other one, or, you know, if tech's leading, then I would expect the NASDAQ to be doing better, but it's really not. What are your thoughts for the Dow?
Over on the Dow, still somewhere, you know, between the rut and the NASDAQ and S&P for me. I still am concerned that we're kind of stuck in a little bit of a range, you know, as we've developed. We still have a ways to go before our true, or at least what I consider our true level of resistance, those highs from back in November up in the 26.2 range. We still have some support. We have developed, which we talked about yesterday, into a bit of a range. It is a little more concerning to me from a technical point of view than the S&P, than the NASDAQ. And really, quite honestly, with the way it's been behaving as of late, I don't know how it changes my opinion without really challenging that resistance level. You know, taking out the 26 would be a start, but then only a couple hundred sounds like a lot more than it is until we get to resistance.
Now, you've earned a nickname, the Breakout Frank. So if this thing started pushing resistance, that would be right in your wheelhouse. So let me ask you, would you be looking to play the sector itself, or would you be looking within the sector to see which of the 30 components of the Dow to play individually?
Generally, I would be looking towards the individual components. With that said, I wouldn't be opposed to working with something like the diamonds or something along those lines if we take out that resistance. Who I like better, who I like less better, would, you know, that wouldn't keep me away from it. You know, so
in second place.
so exactly. So I would call that a very strong buy signal. Whether I was looking at it, you know, on a broad-based or more, you know, specialized level, a lot of that would depend on when it was. You know, that happens on, you know, April 13th when we've got a bunch of earnings around the corner. Yeah, probably the diamonds, you know, because, you know, there's always going to be a potential earnings in the way. So it's hard to answer that, you know, 100% either way. I would be very open to either. Personally, I do generally like to go to individual components over the ETFs as a general rule, or as a starting point at least.
Very well. I like it. All right, moving on to the NASDAQ. Now, with the NASDAQ, we got to talk about what's going on with Apple. So First of all, let's just start with the chart. Let's go ahead and just remove all the drawings here because obviously these points haven't happened. I mean, we talked yesterday that if we get a deeper pullback, it would make us happier. But instead, the market decided to pop up this morning. Nothing disappointing about that. I mean, we could still get a down day tomorrow. It doesn't stop the sentiment. It doesn't stop the trend until we really see something strong. Now, in the debate of is the confirmation the move or is the confirmation the close? And traders can debate that, day in and day out. Where do you stand on this? Because obviously this morning, if you looked at it, you're like, it's confirming, it's turning back around, even with the 2 days, not technically a pullback. What is it doing? But now it's come down off of that, so where it might not close above that level. So as a trader, where do you look at it as a stance of, the close or the break?
I have a simple saying, and it's a close is a close is a close. For me, that probably tells you how I feel about it. For me, that is the confirmation. It is a little more of a conservative approach to it, no doubt about that. But I am a lot more comfortable getting the close as confirmation. It's just me. I understand folks who are coming in 10% of an ATR above the high or below the low or that type of methodology. But for me, and this goes with moving averages too, the closing candle is so much more important to me than the intraday movement, the fake out that can so often occur. So an easy one for me to answer, it's always a close.
You can call that a fake out right there. If you knew nothing about the news, nothing about what happened in tech with what happened yield curve or anything else, and you just saw this right here, to me, that's a fake out.
Yeah.
It was like, hey, we're going to break above it. Nope, no, we're not. And I mean, that happens, and you just got to prepare for it and move on to the next one.
Absolutely. And you need a consistent definition. I honestly believe in so much of this stuff, more than what my definition is, it's that I consistently apply it, whether it's 10% of an ATR, a 2-day close, whatever it might be. I really do believe that as long as we're consistent in that approach and not picking and choosing because it's Tuesday and we're feeling excited, or it's Tuesday and we're feeling a little groggy, that's what I always harp on with people that I'm working with and harp on with myself.
Absolutely. And finally, let's move on to the Ruts. Small caps doing the best of the day, but I've always felt like the Russell is the biggest mover, regardless of whether it's up or down. It just has a little bit more volatility in it than some of the other ones, even though it has 2,000 stocks versus, 500 or 30. But this thing seems to always have just a slightly bigger percentage when it does move. When the entire market's moving, I always feel the Russell is moving a little bit more. But when you look at the chart, it doesn't ever look as satisfying as you think the numbers would give you. It's like I see it being up more than the rest, and I look at the chart, I'm like, oh well, it still is kind of looking neutral bearish. That doesn't help me, the fact that it's up an extra 0.1% over the rest of the markets.
Yeah, exactly. Unless you're looking, I guess, for a bearish entry point, maybe then it does. But yeah, you hit it on the head, neutral, bearish. However, you're personally calling that. We've made lower highs, lower lows. We've worked into those averages, kissed that 9 EMA today as the intraday top for whatever that's worth, currently below the 50. Just lots of challenges. Definitely, in my mind, a bit of a shift in momentum. I mean, if the market runs, you're probably going to see the rut move to the positive side, although you don't know that for sure. But with where it is on its own, that's a concerning chart.
I love the way that you just explained that, because that just shows how great of a technician you are. Within the 30 seconds you look in this chart, you mentioned where it is, what points you see, what technicals you see, higher highs, higher lows, this moving average, that moving average, where it's at. Beautiful. It's instinctive to you to just say, this is what I see, this is what it means. Who cares what the news is?
So yeah, I try. And in all fairness, I cheat. I've looked at the rut every day for over a decade. So, so I've cheated a little bit.
So what you're saying is you didn't become an expert overnight.
No. I was very far from that. But, and folks who know me, I call the market a story, and if you're following along the story, then today becomes pretty easy. Okay, well, the story, how much different is it than yesterday? Yeah, we're up some today. We challenged different levels of resistance on the intraday thus far, but Are we that much different? Yesterday, we'd made lower highs and lower lows. Yesterday we'd closed below the 50-day moving average. Our short-term averages has kind of flip-flopped with the 9 falling below the falling 20. So if you treat the market like a story, and I know so many of our halftime crew here does that by tuning in every day, then it becomes a lot easier to stay on top of it, I think.
Absolutely agree. Well, let's go ahead and move on to the dollar. Now, I've been talking about the dollar for weeks now. I love it. I've definitely fallen in love and become a currency trader as my main trading fix, I guess you can call it. And it's behaving very well, even with this different news coming out now. Something like a bad consumer confidence should be a bad sign for the dollar, but the dollar's still up today. Now, it's not up as much as it's been in the past, but it's still got an up day, which also tells me that even though the headlines are saying consumer confidence is down, actual traders and institutions don't seem to feel that way right now. What are your thoughts?
No, and honestly, I think, from a technical point of view, traders think they've got this guy figured out. If you really think about how consistent it has been, it really has been as easy as buy at 96 and sell at 97 and change.
Yeah.
I mean, it really has been that easy for months now. That's easy to say in hindsight, certainly, no doubt about that. But I think what that really tells me is that traders, yeah, they do feel like they've got this figured out within this trading range. We'll process the news and what it all means when we're taking out these major levels of support or resistance. But kind of while we're stuck in limbo, if you will, maybe we should just trade the pattern.
Yeah. And later on, I mean, not much is really happening in the currency market right now. We have a couple of different events going on around the world, but nothing that should affect the dollar too much. I mean, New Zealand is looking to release their rate, but as all of the other banks have shown, I'm not expecting any giant rate hike out of any other bank around the world.
I think that's fair.
It's just not happening. And if they did, then you know what? There would be a giant move that would, rattle the market a little bit. And I'd actually be a little impressed with those lawmakers over on the other parts of the world.
Maybe a little bit bold.
Yeah, I would be very proud of them. But dollar's doing what it should. Nothing surprising here. Even with consumer confidence being a little bit below what expectations, this thing still looks like a bullish retracement. I'm still bullish on this, looking for it to move up to 97.5. And right now with the dollar moving up, the market wanting to move up, like things are kind of just looking pretty well over here in the U.S. economy, even though, headlines want to tell us otherwise. Now, I was looking again at the yield curve because it looks like it keeps popping back and forth. As I mentioned yesterday that it already switched back. And then this morning, it's now inverted again. Not going to go on a huge rant because I did explain it yesterday, but they are looking at the 3-month versus the 10-month. And the difference of where it's inverted right now is that the 3-month is currently yielding 2.46%, whereas the 10-year is currently yielding 2.45%. We're talking 0.01% difference that people are making these giant headlines about. If it starts yielding, like changing by, a third of a percent, 0.5%, then I'm going to be a little bit more concerned. But also, I'm looking at that 2 and the 10. So just want to quickly put that in there because it's another headline in the news that the yield curve is still inverted.
Yeah, and I expect to see a little bit more of that before it goes away one way or the other, whether it ultimately is just gets washed up into the sea of news or it actually turns into something. I doubt this is the last time you're going to be talking about the yield curve.
Nope, definitely won't be, especially if, we are historically, markets tend to turn over, not necessarily go into a recession, but, we do typically see a bear market every 7 to 9 years. And right now we're at year 10 of a bull market. But that's if you can even say the past year has been a bull market. I think it's, gone from bullish to neutral. But we haven't really seen that full bear market that lasts, 6 months to 2 years yet. And people start getting nervous just on that simple fact that we haven't seen it in a while. So we are past due for that. But that by itself doesn't say that we're supposed to have a recession. because, you know, things are going well, or the yield curves, like there's so many things that everyone is just like, the doomsdayers are always going to be out there. They're always going to be saying like the market's going to crash. And if it does, it's not just going to happen overnight. I said this yesterday. Markets do not crash in a day. They do not crash in a week. So as long as it's bullish and the market's moving up, we're going to trade it bullishly. If we start seeing signals that it's going to slow down or turn around, then we shift our sentiment. But we never try to act ahead of time, because then it's the exact opposite of not exact opposite. It's the similar, but on the upside of catching a falling knife. We always say don't catch a falling knife. Well, don't short a bullish market. Shorting a bullish market while it keeps moving up is the same thing as trying to catch a stock as it falls. It doesn't make sense. You're going to lose money up the entire way until it finally happens. There have been some, perma bears that have lost lots and lots of money over the past 3 years.
Oh, and there always have been, and there always will be. Hey, sooner or later they'll be right. So they got that going for them.
They're going to say, "See, I told you so." And it's like, yeah, but
forget about the last 5 years. So, yeah, I mean, it's hard to guess the top and bottom. I don't care who you are. You hit it right on the head. Go with the trend. I mean, the first thing we're going to have to do is break some support before we can even potentially go into that, right? That's kind of how things got started back last fall. Market started breaking support, and could argue whatever that all meant, but we saw those signals develop. We saw things failing. When things are not failing support, again, how bearish can you be, right? If you're making higher highs and higher lows, I don't think you can be that bearish personally.
See, that's exactly where I am. I don't think you can be that bearish. I mean, the market's looking good. The dollar's looking good. Let's move on to oil. Oil's looking pretty good.
Oil's hanging in there, knocking on that $60 marker, took it out, in the, overnight action. A little bit of a pullback fade here off of that number, it looks like.
Now I'm looking in Forex Factory right now, because I believe the inventories for oil came in today, and maybe it's tomorrow. I'm thinking of.
Yeah, it's tomorrow.
Yeah, it's gonna be tomorrow. That's what we look for. And I mean, they never got it right before. Want to see if they can get something close. This thing is really pushing. It seems to really want 60.
And I think it wants a little more than 60 personally. It's got to get through 60. And while that isn't necessarily a particularly, historically speaking, strong level of resistance in my mind, that is where we took profits last week. So we've seen price action here before. I think it wants to push its 200 period moving average in the 6150 range personally. And those are my expectations. If we can push through this 60, getting to 61 shouldn't be all that much of a challenge, in my opinion.
Oh, definitely not. And I mean, look at this movement. It's had just that type of movement with the pullback. That's a kiss hello pattern on the intraday. So I think it's definitely eager to try. Now, whether it happens today, tonight, tomorrow, we'll have to find out, because oil is a 24-hour market. So we do have to watch it more than just when the market's open. But definitely keep an eye on oil, guys.
Absolutely. Treating the bulls right as of late.
Oh, I love it when they behave. The market is actually behaving now. And I guess that's why I get a little annoyed when the headlines start going all doomsday-ish, right as the market's doing a good job. It's like you're just going to – it's almost deceptive in my mind, because the market is doing well. Like the market's doing well, the dollar's doing well, oil's doing well, and yet all the headlines are saying how awful everything is. The world is terrible, and it doesn't make sense to me. I mean, I'm naturally just a happy-go-lucky guy, and every once in a while I just, feel that anchor of just negative crap pulling me down, and I'm not a fan of it.
No, that's one of the many reasons I'm not a big newsie, and again, if some people really like it, and if whatever it is works for you, then I am happy with it. But yeah, I don't want to read a bunch of negative news. I don't want to read news that, at least in my mind, is primarily put together to get you or me or anybody else to click on the headline, whatever that headline might be. And I get it. That's their business model. And so, no, I don't blame them for that.
Thing is I'm a big fan and follower of politics, and my wife gets on to me all the time. She's like, "Why do you watch that stuff?" And I'm like, "Oh, I love it." But then again, like, I don't get nearly as upset about it as most people do. Most people get like fired up. Like, I just to me, it's a real life soap opera.
It's interesting. Might I suggest watching some professional wrestling instead? You get the same fix and a little less anger.
Oh, I think where I was out on wrestling was when they stomp the ground and punch at someone.
The halftime crew doesn't want to have a wrestling debate this morning, but maybe one of these days we will do a special event wrestling debate. I've been watching wrestling since the 80s when I was a little kid, and I understand what I'm watching. I'm not might be a crazy person, but I'm not a complete crazy person.
Enjoy the entertainment. I'm with you.
One of my best memories growing up is the wrestlers came to my junior high school. I was the student body vice president, so I got to help them put up the ring, get in the ring, and run the ropes a little bit with old Buddy Rose, and that was a very exciting and memorable moment for me.
Oh, that's an anchor-setting memory right there.
I loved it. I should have been a wrestler.
Oh, getting back to the market before we get on a huge tangent. Natural gas, we kind of talked about it yesterday. It's starting to behave again. It's neutral. My sentiment hasn't changed from yesterday or last week. It's slowly starting to form a pattern. It's getting to the point that if you wanted to start looking at naked puts on it, I would be okay with that. Not going to be trading this directionally. I've actually never traded natural gas directionally. I've only used it as cash flow strategies, but it's finally starting to behave again. What I would really love to see is for it to start showing a little bit of upward momentum, and that would just slightly, because natural gas is never a big mover like it did back here. Normally it's a very slow mover. Let me zoom back out. Normally it just does this. So I mean, it looks like it wants to start hanging out like that again. So I want to see it start bouncing up and below those moving averages like it did before. Then I'll start selling naked puts, just cash flow off it. But until then, I'm not in natural gas. What are your thoughts, Frank?
Yeah, I'm right there with you. I'd like to see it. I'd really like to see it break that resistance, the top of this zone that we've been in for a month now. I do believe that is a very interesting signal from the bullish point of view. Like you, I prefer cash flow strategies on natural gas, although Coach Mark and I could tell you a few natural gas stories if you ever really want to hear them as far as directionally goes. But for me, I'm really looking and waiting for it to break to that upside. I don't even necessarily think it's going to. I don't have an opinion either way. I just think that's a very interesting bullish signal if it does eventually happen. And so I'm still kind of on the sidelines with natty gas because, like you said, it was a little crazy, over there for a little while. I don't really do the crazy thing, or at least I try not to. I'm very boring, wimpy, whatever word you want to use to describe me when it comes to this stuff. So still waiting for that break. Still would argue that a break to the downside is a signal. I just still don't like it. Too much history at 250 for me to want to go bearish if we do break to the downside. Sooner or later, we will come out of this range one way or the other, though.
Absolutely. I mean, you can call that craziness when it finally decided to break out of a range, but hopefully you were on the right side of history on that one.
Yeah, I remember we were looking at it in the recap back in October before that first gap to the upside. That was the last time it kind of jumped. Yeah, it kind of jumped the entry point and then basically had a week of consolidation, and then the nonsense ensued from there. So it's been a while. I've just been looking at natural gas and waving at it.
I mean, actually, I'll take a little bit of extra time on this because we talk about the craziness and how it's not really tradable, and that's for a multitude of reasons. One, this is acting out of its character. Two, it is in the future, so it's highly leveraged, and it's very difficult for certain traders to really be able to understand how margin works with futures, because as something starts moving against you, they will start pulling more margin away, even though when you initially got in the position, they took a certain amount. So it's a little bit difficult to know how to manage the trade on that stance. The volatility itself, as it's rapidly going up and down, could just be whipsawing traders out of this. But when, looking back in hindsight, with natural gas, we did see, this higher base type thing happen. Then we saw the gap. In that gap, it then had a small consolidation of another high base type formation, then a pop. So it's like that's following technicals. It is, again, crazy. I didn't trade this. I wouldn't recommend any of our students try to trade this. This thing's too crazy. Then you kind of see this neutral wedge pattern happening. And those type of patterns, they can either break up or they can break down. This one broke down. So it's like, even within the craziness, you can see some technical patterns in here. To me, they just weren't clear tradable at the time. It's always easier to go back in hindsight and say, oh, this is what could have happened or did happen.
Yeah, exactly.
So
when
I just want
things,
to take a second to show that.
yeah, I mean, that's
Even
good
with the
advice. I
craziness,
mean,
it's there, but sometimes even with a technical pattern there, it's just not safe or smart to try to play.
yeah, and comfortable, maybe the word I would use, to do that. Why trade? We've always got lots of options out there available to us. Sometimes we forget it. We get so focused on this stock or that commodity that we have a ton of opportunities out there. If something's not going to be comfortable for you, what are you doing, right?
Stay away.
It's easy to say, sitting here without, having any thoughts other than just hanging out, talking stock, but you get in your own head by yourself, you can go to some weird places, and always remember there's lots of opportunities out there. It doesn't have to be this stock, this commodity, this market, and certainly doesn't have to be today.
And you know what, traders out there, y'all get in that moment where you're thinking about doing something crazy or breaking rules and trying to go for the extra ROI. Before you do that, I challenge you to first, tweet at me or Mark or one of the other coaches and say, hey, I'm thinking about doing this. And see if we can bring you back down to earth. And a great indicator that you're being a little bit greedy is if you don't even want to tweet it out there or put it out in the public that you're looking to do that trade because it's a risky trade. I've had ones like that where I've mentioned what I've done and Matt's like, wait, what did you just say? And I was like, oh, I did a credit spread here on this. He was like, what are you doing? So we all have those moments. And if y'all ever get those wild hairs, like tweet at us, we'll give you our advice. And that's my 2 cents on that. Moving on to gold, because we are taking a little bit longer than I anticipated to run through the skyline. So gold, we talked about it yesterday. I don't see any difference. I really want to see it break that level that it's at above that 1325 level to move to the upside. I don't know if that's going to happen, especially with, markets doing well. If money's going into other markets, then it should be coming out of gold. Gold to me is I'm just at a viewing platform. I'm just going to watch it until I can see a behavior type forming. I'm not trading gold right now. I'm not looking to trade gold. So I'm at a wait and see. I'm going to sit back with my popcorn and watch.
Hey, I'm right there with you. Right there with you. Nice working up to resistance yesterday after trying to break out all week last week. Finally took that out and pretty easy run up into that old swing low, old pivot resistance zone. Profit taking happening here today. But I am with you. I still feel like this needs to develop something a little more comfortable from a trader's point of view.
Absolutely. And last but not least, actually it might be least, silver, just because it doesn't even want to seem to follow gold like it normally does. Silver, I think, is kind of like the metaphor we talked about yesterday, the toddler. I think silver is acting more like a disobedient teenager. They're like, you know what? Y'all want to do that? I'm going to do my own thing over here. I'm cooler than you guys. And they're not necessarily making it very far. So again, kind of fits that teenager metaphor.
Yeah, I'm with you. They're on timeout. There's no doubt about that. They just have so much. I mean, yesterday finally being able to close 1550, a positive sign, but here we are today, no follow through, back below it once again. Again, if you're misbehaving, I will put you in timeout. I won't think twice about it. And that is where, silver really finds itself. I'm much like the dollar, looking at the longer term, looking at the big ranges that we have developed, between, below 15 and above approximately 16 there. I can wait. I think either a break above or below, whichever way it ultimately decides to work with, is going to be a really interesting signal. I'm comfortable waiting until that develops as long as it takes.
Absolutely. All right, guys. So we're going to go ahead and even being no justice, Frank and I decided we're still going to stick to Delta Tuesday. So we're kind of talking about what we're going to do for Delta Tuesday, and we'll get into that here in a second. But first, I need those likes to go up there. Well, we are more than 50%, but I want to see like 70, 80% likes on this thing, guys. Like, I know you're out there. Just click it. Just click it. And if you haven't subscribe, ring that bell. Even if you're subscribed, it won't always notify you when we go live. If you ring the bell, you will get that notification. So guys, even if you're watching after the fact in the replay, give us some likes, subscribe, leave some comments, let us know. And from that, Frank, you and I were talking about what we want to do for Delta. And talked about a couple different things, whether it be, entering a stock that might have gapped past your entry point, or, how we want to look at two targeting, which Justice Brothers talked about last week. And we agreed on kind of looking at different practices on adjusting your stops. And one of the reasons we want to talk about that is that there really isn't a hard science as to how and when you should adjust your stops. This is one of the more artsy sides of trading, because there is an art and a science to trading. And I think adjusting stops falls more on that art side of it, to where it's subjective as to how you do it. And we're going to do a dive into that. What are your thoughts on stops before we kind of jump into it?
Well, two things. First, I think we should answer the halftime crew in the regards to your parenting references. Very good catch. Nothing really gets by them.
Murray, calm down. Pause on that one. I'll let you know, but no.
But you're right. When it comes to stop losses, it is a little bit of an art. There is no doubt about that. I always think about it as the glue that I'm buying or paying for, to hold my trade together. How much do I want? How much do I want to pay for? Obviously, I want as much room as humanly possible with as little risk as humanly possible. But just like anything in life, you can't really have your cake and eat it too. So I always like to compare a couple. Sometimes it's not that much more to get a little bit more, or maybe even a lot more support, whereas other times it just might price you out of the potential trade.
I completely agree. So the stock we were talking about looking at is AXP. Now, this is actually an interesting setup in the fact that we were dogging the financial sector as being the worst one, but AXP seems to be setting up very nicely, even with financials, being a little bit lagging. And actually, it looks like from financial sector being down, it gave them a nice bullish retracement here into this 110 mark, which I'm really liking this setup. This has that technical congruency that we've been talking about, that new word that we keep throwing around, but it's not really new. It's just it's come up a couple different times, and it works. It fits. So I really like this setup. So from this, I think we should go through prep this trade. So first of all, Frank, if we're looking at this trade, where would you be looking to enter off of this trade right now?
I'm going to assume, for the sake of this conversation, that we're looking at end of day candle today, because that can change my answer, right? But so assuming that we were going to this was the end of the day, and I'm kind of building the trade off of this. This one's actually fairly easy for me from a point of view of, I want to see it continue the momentum. As of right now, we have made a higher high and a higher low than we put in yesterday, seeing a little bit of an increase in momentum. I want to see it continue that. So basically take out today's high tomorrow morning, right? So
Absolutely.
Step one kind of be, let's break today's high to get in, whether that's, whatever your rules are, 5% of an ATR, 10% of an ATR, whatever your personal rules might be. That would kind of be the first step. Now, in this particular case, we're also kind of hanging out right below that 9 EMA that's kind of sliding down into that 20. And much like Coach Mark, I am a believer in the 9 EMA moving average. So I'd like to see it push above that too. And it just so happens that if I get that breaking above today's high tomorrow, I'm also going to be pushing back above that 9 EMA right along with it. So that would kind of be my thought process from an entry point of view.
So what you're basically breaking into is the set method. Now we are going to focus on the stops themselves. So let's go ahead and just put a number on that target. If we're going to use a 10% of the ATR above the high, I have my ATR right here. So we're looking at 17, maybe 18 cents. So the high being 110.40. So we're going to add 18 cents on top of that, which means our entry price for this particular stock is going to be 110.58. So I'm gonna copy Tim here a little bit. Guys in the chat, put in entry 110.58 in the chat for me, so you guys can see how we're setting this up as we would be playing it. Now, next step that we're going to be looking at is where our current stop is going to be. Now, this is before we're even entering the trade. So where would you put your current stop?
We got a couple of options here. Option A, very straightforward. Let's use intraday low. Let's use today's low, minus our whatever our rule is. We'll just stick with 10% since that is where we're at. That's going to get intraday support working for us, give us some room to work with, not a tight stop by any, a loose stop by any stretch, but certainly giving it a little bit of room to take out today's low. We'd be taking out today's intraday resistance, right? Just kind of that whole school of thought. So there's option A, and a very common, I would say, option for traders, and very well maybe the way that we'd go about it. But within this particular case, taking away how much we are going to have to pay, because obviously we are going to have to factor that in, I would much prefer to be using that swing low from yesterday, which if I get that upward movement tomorrow to trigger me into the trade, I think I can at least start to make the argument that this has established as support, has established as a pivot, and that is holding my trade together. So all things being equal, I'd much rather use that as a support level than today's low or the intraday low, because I'm, in my head at least, I'm getting a lot more out of that.
See, so I really like what you were just mentioning there. So you basically said there are two different options you were looking at for a stop. First one you were saying is today's low. So stop here, right? And there are some benefits to that one, and there are some downsides to that one. So we have some pros and cons on each. And then the second one you said was down here. Again, some pros and cons on each. So the tighter stop, the more aggressive stop, we can say that the pros for that one is that you're not putting it as much at risk if you happen to get triggered in tomorrow. If you get triggered in tomorrow and then it were to come back down and stop you out, then you're not going to lose as much. So the actual loss itself is going to be less. But the con on that one could be that if it were to do something like that, trigger you in, touch the tighter stop, and then move to the upside, well, now you've been shaken out and you miss out on the trade that you should have had as a profitable trade. So pro and con with that one. And then the other one down here, the pro is that you don't have that risk of the whipsaw because it's a looser stop. So based on it doing that, the likelihood of it being able to whip all the way down here and then move to the upside is greatly decreased. But on the flip side of that, we're putting a little bit more money at risk. So personally, when I look at this one, I want to set my stop down here. And I see 108 as a simple target with the low here of this one at 108.19. So I'm going to stick to what I was taught, and I'm going to set this ATR at 1/2 below the previous support. So previous support, I'm going to call this low, and then I'm going to subtract 1/2 of that. 1/2 of, make me do math on what's 1/2 of $1.75. 87 cents.
Sure, so, close enough. So, bad math crew.
Yeah, I mean, doing that kind of math that quickly, I mean, I should be able to, right? Which honestly, and to that point, you don't have to do this quickly. Setting up and prepping a trade doesn't have to be fast. Take your time, especially if you're new to this. Take your time, subtract those numbers, and understand why we're doing each of these numbers.
Absolutely. And to that effect, Cody, just something to quickly add. I mean, for me, I always like to prep trades while the market's closed. That's when I'm the most level-headed. I don't have that rushed feeling. I have all the time in the world, so to speak. But at the same time, we want to be productive. And I don't know who it was in the clubhouse, or maybe it was here in the halftime report, but basically they said that they would put some sort of a timer, say I've got 5 minutes to go through this trade and put it together. And so from a challenge point of view, getting comfortable with it, obviously in reality, take as much time as you need, but to kind of get comfortable putting these trades together, I thought that was a great idea to kind of challenge yourself as you're getting some practice.
Love it. So using the 1/2 ATR rule from the previous low gives me, so what I did is I took look right up here at the loss, or the low, excuse me. I took 108.19. I subtracted 87 cents from that, which was the 1/2 of my ATR, which gave me 107.32. So right down here, I drew this line 107.32. So guys, put that in our chat. That's going to be our stop price for this particular method. And what I want to do for this time is I want to just show the risk to reward with the different stops. So first of all, we have to start with one stop. And this is the one we're going to start with. Now, targeting, because I don't want to spend too much time on the targets, I'm just going to steal the targets that we had decided on in the scouting report meeting, which were 115 and 120. Let me add some space up here. So now we have both of our targets. So for targets, guys, put in the chat. We'll first put in the stop at 107.32 in the chat. And then for targets, we're going to be targeting 115 and 120. So now, with our targets being 115, 120, we're going to start by just looking at that first target. And what I want to look at is the risk to reward ratio. Now, that risk to reward ratio is definitely a gold standard that every trader should have. You need to know whether or not you're always going for a 2-to-1, a 1.5 to 1, a 3 to 1. Frank, when you're looking at a risk to reward ratio, what do you look for?
I was taught early that 2 to 1 or it doesn't count. And so 2 to 1 for me. Now to the first target, it will depend a little bit. The 2 to 1 definitely on the second target, it's a no-go if it's not better than 2 to 1. On the first target, I always feel a lot more comfortable with if I'm closer than further away to that, and so because a lot of times, as you know, Cody, the first target is my target. And so that's always going to be a consideration. And if I feel that's the case, well, that's going to have to be my 2 to 1. I might say, hey, 120 is my second target, but I'm a wimp. 115 puts me at resistance. I want to close this trade. I could lie and say it's still 2 to 1, but for me, it probably wouldn't be in that scenario, right? For me, well, if I'm going to get out at 115, I can say whatever I want. That doesn't mean it is the ratio. So for me, it's always 2 to 1, and it's to my target. Where do I see myself locking in profits closing out of the trade, wherever that might be?
Love it. So real quick, and actually I'll show this in two different ways. I'll show it first here, and then I'll jump over to the tackle trading tools that we have. What I was shown, since our entries up here, I was shown when I started to simply draw myself a little box. Just a visual. Here's my stop loss. I'm entering, and then I'm gonna draw another box up here saying, okay, it's my profit zone. And just kind of look at that. Does that look 2 to 1? Looks close. It's probably not it. So on this particular one, we might have a higher risk. And actually, we can do the math here and say that our risk is about $3 risk, and looks like our reward is $5. So no, we're not meeting it. So
no, at 115, if that is our target, we're about 1.3 to 1.
So we're actually over or under targeting or over risked on the stop point. So that's, like I said, one of the downsides to a looser stop is the monetary risk associated with it. So this might not be the best place to put that stop on this particular trade. Now, you could always argue, well, I'm just going to target 120. Well, you have a lot of resistance back at 115. Is it going to get to 120? We don't know. So we want to make sure that first target is going to have that 115 mark. So let's go ahead and I want to zoom in all the way. There we go. Let's go ahead and look at a second reducing that. Marie, you got a 3 to 1 risks for reward. Yep. So it's not.
Works out to be about 1.3 to the first target. And again, that's okay. I think, I want it as close to as possible, but that's okay if you really are targeting, further beyond that, right? We just don't want to lie to ourselves, basically, right?
Exactly. And that's really what it comes down to when you're lying to yourself saying, oh, I can get it. So this with the stop down here isn't going to work. So now let's look at adjusting the stop based off of the today's low. So if we were to look at today's low and then do the same 1/8 or half ATR rule, so we're going to take the 109.43 and we're going to subtract 87 cents from it. And that's not right. Over here on my calculator. 109.43 minus 0.7 is 108.56. So 108.56, let me remove this one. 108.56 is right there. Now, what I instantly see is that obviously that's not within that wick. So I just want to real quick check the intraday and see where that wick is on the intraday. Make sure I'm not above a support level that might, whip me out or something. But when I come down here and I see that actually there was some support right at that level, I'm still comfortable with that. Frank, what are your thoughts on the stop being set right here below today's low 1/2 ATR?
I think it makes sense. And I think most importantly, it still gives us glue. Would you rather have that pivot? Of course, that's why you started there, right? Or that potential pivot from yesterday, but we still have some glue to hold this trade together, which, very easy rule that I have is my stop loss on a bullish trade has to be below some level of support, above some level of resistance if it is bearish. So yeah, that absolutely can make sense. What this can also do is help us kind of compare apple to apple. How much more are we getting one method versus the other? Right? And helping us make our choice. I think maybe in this particular instance, especially if you're really trying to target to 115, for me at least, yeah, this makes a lot more sense. But if I'm really, I am comfortable targeting a little bit further into the 120 range, well, I'm comparing them apple to apple. You know what? I don't have to pay that much more to get that pivot or that low from yesterday. And I think, if I'm trying to, work, a little bit of a longer term into that 120 second target zone, I think it makes it easy call to actually place the stop loss below yesterday's low, if that makes sense. So I'm actually able to compare them basically apples to apples, if you will, as I'm trying to figure out what actually fits into my perspective on the read of this chart.
And I absolutely agree with that, because when it does come to stops, even before you get into adjusting the stop, that very first one is, because the worst feeling of a trader to me isn't missing out. It's when I get in and get whipped out. And that happens one of two reasons. One, just because volatility happens to, hit my trigger in, or, you get a little bit trigger happy and you pull the trigger before it's actually confirmed, and then you get whipped out. So that first stop, to me, one of the worst feelings is when you do get triggered in and immediately get stopped out because of some volatility, or because, just the market feels like doing it to you. So I really want to take my time on that first target. Now, after this first target, so looking at, I adjusted these as Frank was talking there a second ago. You can see that this risk to reward visually makes sense, and we can do the math and show that there is a 2-to-1 risk on this trade. This makes me feel a little bit more comfortable. Now, I could adjust that, but as I've said, where your stop comes into play, you have to take those factors into play. There's a plus or minus risk to reward ratio, a pro or con based on that. And each of those trades you need to know. And then another factor I'm going to throw in there, which is subjective to every single person, or objective, excuse me. Subjective. It's subjective to every person, is what's your fear talk or your pain threshold. If my pain threshold is less than Frank's, then, I start getting down $20, I might start freaking out. Frank can get down $50 and he's like, it's fine. Whereas I'd be like, oh my God, what's going on with this trade? It all depends. Everyone has that pain threshold, and you need to learn that. Whatever yours is, when you start getting nervous, when things are going against you, you're pressing your pain threshold. And the problem is if it goes too far past it because you don't have a stop, or your stop's too loose, it's harder for you to exit the trade the further past your pain threshold you get.
Yeah, exactly. Again, it comes down to comfort. And beyond that, our position sizing should keep us safe there, right? I would just, I'm bad at math in my head, but let's say I'm risking $100 a trade because I'm really bad at math in my head. Well, I'm just going to have a few less shares if I go below yesterday's low versus today's low, right? If we assume risk to reward, we're good either way, I would have maybe 100 shares, and again, math's terrible, but I would have maybe 100 shares below today's low and maybe only 95 shares below yesterday's low. So I'm going to let that, hopefully we're all doing that, whatever our personal methodology is we're determining our position size. I don't want to lose more money than I'm comfortable because I want a tighter or a looser stop, right? If my max risk or my max comfort zone on a loss is $100 a trade, I'm going to build my position size accordingly. So it's $100 really whichever way it goes, right?
Absolutely. Now, before I do want to talk a little bit, and we're pushing up against the time clock, but that's okay because I think everyone's having fun. So we're going to keep trucking on. So real quickly before, because I want to talk about adjusting stops after the trade started moving towards you. So things are going well. I want to get into that. But really quickly, I want to show, if it'll load, share a different screen with you guys. I want to show you guys over here. So in tackle trading, you go to one of the reports. So here's a little sneak peek at the options report. Enjoy it. You can actually do a risk to reward ratio. So let me say AXP, which is from the report. And I will zoom out a little bit. I can say that this is the trade I want to make, and I can adjust my stop to where I feel comfortable that, that 108.56, 52, that works. And then I can say that I'm targeting, $15. So now within here, I can see in the chart that there's my profit, there's my risk. It then shows me when I put my cursor over it, what my risk to reward ratio is very quickly with no math. So this is a really cool tool, guys. If you're a I don't like doing math type of person, literally on the reports themselves, get over here, draw this out. It's this tool right here, and it'll tell you what your risk reward is. And then you don't have to do any math.
I do that all the time because I am bad at math. My worst subject always. That tool is fantastic and it really helps. And what I'll typically do is kind of start general and then get really specific, right? So I can kind of, not necessarily something on the option report, but something in my own watch list. I just want to be able to process the information quickly, and then I can kind of work my way into the specifics for a potential trade.
Absolutely.
So I'm not going to fight to the penny on my stop loss kind of as I'm just visualizing it, if you will.
So I definitely love this tool. You can just adjust it and keep going until you find your comfortable numbers. And then you know what? You find your comfortable numbers here, you program them in, and then you don't touch it. You walk away. You either let it work or let it not trigger you in, or maybe it goes against you. It happens.
Exactly, but you've got your plan and you're ready to roll. And cold corporate, you can't change them right in the options report, but if you go into the trade center, just into the trade center, a little bit down that page, there will be what's called my watch list. So it'll be your watch list or whoever's watch list. So you can actually build them out in your own personal tackle trading, if you will, in the trade center.
I've never actually used a my watch list on here. Look at that.
I use the trading view charts anyway, as you know, and many of the market recap know. I love the trading view charts. They are my favorite charts. So that's the platform I do all of my charting on.
Very well. Let me close this window behind me. It was getting a little bright. I was starting to look like I was in the witness protection program with the light on my face.
There you go. There you go.
Right.
And guys, remember, while we focused on, two areas today, just from, what we're seeing and kind of a time perspective, there might be scenarios. What if the 50-day moving average was at 108? Well, I could pay a little bit more to get that working for me too. Or I could go into that intraday like Cody did and see what I've got working for me. So I can take this same thought process and evaluate, based off of what I'm seeing, to give myself a couple of different alternatives to think the trade through a little bit. I think it's a really good habit for everybody to get into.
Absolutely. So real quickly, and I'm not going to spend too much on this since we're already over time. As this were to move, let's say things work out beautifully for American Express tomorrow. They start moving up. We start seeing some green candles in our future, and we're starting to see a little bit of profit. We're seeing a candle here. We're seeing a candle here. At what point do you start adjusting your stop loss? And how do you do it?
That is going to depend on a, pullback by pullback basis. I'm going to adjust pullbacks differently than breakouts, just for an easy example. Couple of ideas there. One is kind of the traditional, if we get in tomorrow, it goes up, it closes with a higher, higher, and higher low, move our stop loss from below today's low to below tomorrow's low and trail it up that way, right? Basically applying the same kind of thought process to the management of the stop as we applied to the original placement of the stop, right? So if you kind of look back to that last move in March, maybe we got in on the 11th with our stop loss below that low and then moved it up accordingly. And then when we finally took out yesterday's low tomorrow, right, that's where we end up getting stopped out. Very traditional methodology, probably for a reason. A lot of people do like that type of a management technique. I've worked with people before that will kind of do a 2 days back. So they'll let tomorrow happen, assuming we get in, we get that higher high and higher low. They won't move the stop loss that day if it continues that movement. So then you're basically trailing it back that second day.
That's exactly what I do. Yep. So when it comes to stock and options, that's the way I do mine, is that if we get a movement tomorrow and I get triggered in, I'm not adjusting the stop loss. If I get a second day, if it's a big day, I'll adjust it. If it's another small candle, because a lot of the times, things don't move as fast as we want them to. Things might, meander kind of like this right here it did. So it doesn't, yes, these are all green candles. They're moving up, but they're not moving up like this. So when I get movements like this, I'm slower to move my stop than when I get movements like this. If I were to, let's say, get triggered in and then get, that movement, my stop's getting moved.
So, and I think that makes perfect sense. Kind of blends the benefits of kind of that day-to-day methodology of pulling your stop loss up with more of the swing philosophy. Let's keep it below that swing low, right? Kind of a little bit of a blend between the two. So that's certainly a very interesting method to go about that. We can use moving averages. We can use something like an hourly, 50-day moving, 50-period moving average. I'm sorry, it wouldn't be a 50-day on the hourly time frame, or an hourly 20 or something to that effect. I'm, of course, a big fan of the 9 EMA in a lot of ways. So that can be a very sensible way, kind of basically trail it up along with whatever moving average you like to use for that. There's not a perfect way, and there's ups and downs, and none of them is going to work 100% of the time. It's really about having that plan. And like you said, that comfort level with your pain tolerance. If this has that nice day tomorrow and closes at 114, are you comfortable not moving your stop loss? It's easy to say today when who knows, right? But, I know me this flies up to 114 tomorrow. Better. Yeah, moving that stop loss. So hopefully that does give you guys some different ideas as far as management goes. Like Cody said, it really is, it takes a little getting used to, a little more art than a science. I always say this to people I meet: any plan's better than no plan. Have a plan that you're working with as you're refining it into basically going beyond a plan into, hey, these are the rules. Right. And I always encourage people to give it a good body of evidence, do 20 or 30 virtual trades using whatever methodology it is that you're working with, and then reevaluate. Do I need to?
And I will say, for our newer traders, the newer you are, the stricter you need to be on your rules, because that art and science that Frank and I are talking about, that's when you learn those things like your pain threshold. You learn your comfort level. You learn what indicators you like a moving average or, a Fibonacci or things of that sort. So as you're still getting that, finding who you are as a trader, finding your personality, you'll be able to learn that art side of it. So it stops probably one of the trickier things to teach, if not targeting. Targeting is also a trickier thing to teach. And it does come with practice. You can't learn to be a stopping expert in a day. The other part that is hard to learn with that is when you do have a trade that stops you out and you take that loss. That's also not a good feeling when you get going. But as you do this over time, you realize that if you're doing a 2-to-1 ratio or 3-to-1 ratio on delta trades, and you're losing 50% of the time, you only have 50-50 on it. But when you're winning twice as much as what you're losing, then you're going to be a good trader. If you're winning 3 times what you're losing, you're going to be a great trader. So those things all take time, and learning the emotional side of it, which I think is also why it's more an art than a science. is definitely something that just comes with time. Practice, guys. Stay out there. We're going to be here every day. I mean, Frank, I don't want to give this report up. I want to keep it.
Fair enough. No, and if you haven't checked out Justin's study that he's been doing over in the clubhouse, I would definitely encourage you to do so. It really plays into that swing trading philosophy, directional swing trading. You know, you hear traders say it's not about being right, it's about making money. You know, we always put way too much pressure on today's trade. I always call it this trade. Well, I know I'm going to lose some trades, but it can't be this one, right? I don't say it out loud, but that's kind of where my brain wants to go. And seeing, you know, that body of work, I've won some, I've lost some, my risk to reward is doing its job, my position sizing is doing my job. Justin's done a fantastic job with that study he's doing. I would definitely encourage everybody to go check that out in the clubhouse.
All right. Well, we could talk all day, so we got to cut us off. So, guys, thanks for coming out. We will be here again tomorrow and the next day, maybe. You'll have to stick around to find out. But until you guys, thanks for joining, and see you guys over in the clubhouse. And tonight we have the coaches show, so definitely want to get out there and check out that for our pro members. The actual coaches show is where we do some of the deeper dives, and we do a more specific teaching to our pro students. So definitely check that out tonight. Frank, any last thoughts?
Follow the rules, trade your plan, you know, same as always. Don't get crazy either way, you know, don't be a crazy person. So, all right, halftime crew, it's always great to see you. I'll see you guys for the market recap. You're always invited to join me over there. If not, we'll be back for at least one more day before we have to duke it out. Watch some wrestling tonight, Cody, because it might be a tag team match between you and I and Matt and Tim for the ownership of the halftime report.
Absolutely, guys, we're out.